Hello and good day to everyone. This is a recording of how to construct a financial statement of cash flows given the financial statements that were given in class. We're looking at the advanced technologies income statements and balance sheets for 2020 and 2019. This exercise is all about constructing the statement of cash flows for this company. Now, in order to know how to construct the statement of cash flows, let's first define what the statement of cash flows is. The statement of cash flows is a financial statements where we summarize the sources and the uses of cash from operating, investing, and financing activities for a specific period of time. Now, what are the financial statements that are needed in order to be able to construct the statement of cash flows? First, we should have the balance sheet for the current year and also the balance sheet for the previous year. We also need the income statement of the current year. So if we're going to construct the statement of cash flows for 2020, we should have the balance sheet for 2020, the balance sheet also for 2019, and the income statement for 2020. Okay, so those are the three financial statements that we need in order for us to be able to construct the statement of cash flows. Now, since the statement of cash flows is all about monitoring or recording the sources and the uses of cash from operating, investing, and financing activities, we need to know how the changes in your assets, liabilities, and equity affect this cash flow statement. To summarize, here is a matrix that shows us what happens to the statement of cash flows when assets increase or decrease. Okay, so when assets increase, it's a use of cash, which means that cash decreases when assets increase. Of course, the reverse is that when assets decrease, then it's generally a source of cash. Now, the opposite is true for liabilities and equity. Any increase in liabilities and equity means the company was taking in debt or taking in infusion of capital from the shareholders. Then any increase in liabilities and equity would mean a source of cash. So let's copy this. On the other hand, a decrease in liabilities denote that the company paid their borrowing. Okay, so this is a use of cash. So these are the three principles that we need in order to understand or to construct the statement of cash flows. So let's go back to our advanced technologies financial statements. So we're investigating here what happened to the cash as far as advanced technologies is concerned. We're given the balance sheet for 2020. We also have the balance sheet for 2019 and the income statement for 2020. So that means our financial statements are complete and we can construct the statement of cash flows. So the bottom line is we're going to investigate what happened to cash. So in 2019, or at the beginning of 2020, cash was 80 million, and at the end of the year, it became 10 million. So if we get the difference between the two, okay, so there was a 70 million reduction in cash balance. So this is what we want to investigate. We want to know how cash became decreased by 70 million, taking into consideration operating activities, investing activities, and financing activities. If we net this, the net of, if we sum up the cash flow from operating, investing, and financing, and we sum this up, it should be a decrease of 70,000. In other words, this one, and this one should tally. They should be the same. Okay? So how do we start? How do we construct the statement of cash flows? The first activity here is operating. And when we construct the statement of cash flows, we pick up from the income statement. That's why we need the income statement of the current year. Because as far as operations is concerned, we pick up from the net income after tax. Okay, so this is the figure that we want. So for 2020, the net income after tax was 137.1. Okay, that forms part of operating activities. Okay, now net income after tax is not cash flow. Okay, so we have to convert this into cash flow in order to we have to adjust this in order to convert it into cash flow, because what we're looking here are activities that affect cash. Okay, so last time we said that there's an item here that's really non-cash. So what we do is, let's copy this, or let me just do this. We add here depreciation and amortization. Okay. Now, why do we need to add this? Add this back? Because depreciation and amortization are non-cash expenses. Okay. So they actually reduced the cash flow. So we're going to adjust it and add it back. So for 2020, this was 100. Okay. So the total cash flow from operations was 237.1. Okay. And then we go down the line, we take a look at the changes in as far as the balance sheet is concerned. Okay. So let's start with this first one. We're not going to include cash here, cash and cash equivalents, because this is what we're investigating. Okay. Short-term investments. Short-term investments will fall under financing because this is a financing activity. Okay. This involves interest. Okay. And then notice that cash short-term investments increased from 3.6 to 3.8 million. So this is indicative that the company put in more money in short-term investments. And from what we summarized here a while ago, when assets increase, then that denotes a use of cash. Okay. So short-term investments will fall under financing. Okay. And then it is a use of cash. So for use of cash, it means negative. So I'll just subtract 3.6 minus 3.8. Okay, so that's negative 0.2. It's a use of cash, so it's negative under financing. Okay, let's go down the line. How about accounts receivable? Accounts receivable increased from 415 to 615. Okay, it increased from 415 to 615. And again, this is accounts receivable 311.4 to 371.2. This is an asset account, and any increase in asset means a use of cash. And accounts receivable falls under operations. So this will be equal to, since it's a use of cash, I'll just subtract the lower, okay, to the higher. Okay, so 59.8 million negative, it's a use of cash, 59.8 million. In the same note, inventories increased from 415 to 615. This will fall under operations also. So this will be equal to 415 to 615. This is also a use of cash. So negative 200. Inventories is an asset and it increased from 415 to 615. Therefore, it's a use of cash and it will fall under operating activities. Okay. Now, how about for net plant and equipment? Now, take note, this is net plant and equipment. I'm going to discuss this further later on. Plant and equipment falls under investing activities. Okay, so there was an increase in property, plant, and equipment from 870 to 1,000. So this is a use of cash, and it falls under investing. So this is equal to 870 minus 1,000. So that's negative 130, which means a use of cash under investing. Okay. Then we now go to, so nothing more in the asset side. Okay. So under liabilities and equity, first we have accounts payable. Accounts payable is born out of operations. Okay. These are trade payables, and it's incurred, or it's generated from the regular course of the business of the firm. So there was an increase in accounts payable from 30 to 60. And let's go back to our table here. When liabilities and equity increases, then it's a source of cash. Okay, source of cash. Okay, therefore, we put it under operations, and this should be a positive difference because it's a source of cash. There, 30. In the same manner, accruals also increase from 130 to 140. Accruals will form part of operating activities also. So this is 140 minus 130. That gives us 10 under operations. Okay. Then we have here long-term debt. Okay. So we don't include the total because this just sums up all the other components of your current liabilities. Long-term debt from 580 became 730.4. Therefore, this is an increase in liability. Long-term debt will form part of your financing activities because this is interest-bearing. So this is equal to, and it's a source of cash. There was an increase in bonds. Okay, so that's 730.4 minus 580. Okay, source of cash, increase in debt. Okay, common stock, guys, there was no change in common stock, but nevertheless, let's just put it here. If common stock increases, then it should be under financing, it's a source of cash. If it decreases, then it should be a use of cash. Okay, so it doesn't matter which I subtract here, but it's still 0. I just reflected it here so that you're aware that common stock forms part of financing, and if there's an increase, then it should be a source of cash. Okay, so retained earnings, we won't touch this because it's already accounted for by your net income after tax. Okay, so these are now the activities, okay, that we consider: operating, investing, and financing. So when we sum this up, okay, some are operating. Okay, so as far as operating activities is concerned, there was a net source of cash of 17.3 million. For investing, there was a net use of cash, 130 million. For financing, there was a net source of cash, positive 150 million. Okay, if we sum this up, it's there's a net increase in cash of 37.5. Now take note, this does not tally with the net decrease in cash of 70 million. Okay, when we accounted for the operating, investing, financing, it turns out that this is an increase in cash of 37.5 million, which does not agree with this one. Okay, so which means that there's something still missing here, or there's something wrong here. Okay, now there's another activity that we were not able to capture. Okay, that's after the net income after tax. If you notice here, net income after tax, there are other activities here. Okay, and one of them is the common dividends. So dividends was distributed to shareholders, and this involves cash, and this was not accounted for in our template, in our pro forma. So we will have to include that also. This is a use of cash because the company distributed dividends to their shareholders. So let's just put it under at the bottom, distribution of dividends. Okay, and distribution of dividends, this is equal to, I'm going to put negative. Okay, negative, how much dividends was distributed in 2020? It was 57.5. So I'm going to put there negative because this is a use of cash. Okay, all right. Now we notice here that the net decrease in cash is 20 million. However, here it's 70 million. So there's still a discrepancy. Okay, there's still a discrepancy. What happened? Where did that 50 go? Okay, where did the 50 go? Okay, so this is something that we still have to consider or correct or adjust in order to make sure that this should be 70. Otherwise, if this does not agree with this, then we cannot really construct the statement of cash flows because we're going to have a wrong net increase or decrease in cash. Okay, so let me just point out to you where the adjustment needs to come from. Okay, now The adjustment comes from your net plant and equipment. The net plant and equipment here from 870 to 1,000 does not really reflect how much was invested in net plant and equipment. Why? Because it does not give us the cost, because this is already netted against depreciation. Okay, remember that when we present your property, plant, and equipment, what we have to use is the, okay, let me just write that here, PPE, okay, at cost, and then less accumulated depreciation to arrive at your net PPE. Let me increase the size of this. Okay. Now, if we're given, for example, if we're given, let's say this was let's say 1,000, example only, and this was 1,500. Okay, if these were the figures, then when we get the difference of this, let's say it's equal to 1,000 minus 1,500. Okay, then the negative 500 here, which means the use of cash of 500 is what we will put here in your financing. In your investing, I mean. Okay. However, what's given to us is the net PPE. Okay. So that does not really tell us how much was really invested as far as the property, plant, and equipment is concerned. So we need to compute. Okay. We need to compute for that. Okay. So let me just okay. Let's just change this. I'm sorry. Control C, because I'm going to change this. There. Okay, so we need to compute for the investment in property, plant, and equipment, because here we're reflecting 130. Where did we get this 130? We used net plant and equipment. 870 minus 1,000, that's negative 130, which means it's a use of cash, since your PPE increased from 870 to 1,000. However, take note that we're given the net. Okay, we have to look for the at cost property, plant, and equipment, because that's where the real investment comes from, because this is already adjusted for depreciation. Okay, so since we're not given the at cost, then we will have to do some computation. Okay, the computation will take this form: computing for the PPE investment. Let me just increase this a bit. Okay, so we start with how much was at the beginning. Okay, and then we have to solve for how much was acquired by the company, and then how much was sold, and then net it against depreciation, and then we have to, that's how we come up with the net PPE ending. So what do we know here? We know this. We know that the net PPE beginning is this amount, 870. The acquisition, we don't know, so we will have to solve for this. The disposal, we're not given any information about the disposal, about some of the fixed assets or PPE being sold. So we can just assume that this is 0. And the depreciation, okay, we know this depreciation for the year is, it's 100. Okay, and then we also know the net PPE ending, which is 1,000. Okay, so knowing this, knowing that there's 0 disposal, knowing depreciation, knowing the ending, then we can solve for the acquisition. Okay, so let's fill this up. Okay, sorry about that. PPE beginning, what was the beginning? 870. Okay, so let me just copy the format. Okay. Oops, I missed this. Let's fill that up. Okay, then this is what we want to solve. Okay, we don't know what the real acquisition is. Okay, what we reflected here is 130. It's a difference of your net PPE 870 minus 1,000. Okay, but we said that that does not really reflect how much was invested, because here what's given is a net PPE. Okay, so we will use this pro forma in order to compute for our net PPE for our acquisition. Our disposal, as I mentioned a while ago, there's no information to that, so that's 0. Our depreciation is equal to, how much is depreciation? It's equal to 100. Sorry. Okay, so I suggest we do this. Okay, depreciation, since that should be deducted from your PPE. Oops. So this is equal to negative, there, negative 1,000. Okay, so let's take a look at this. So 870 plus your acquisition minus your disposal minus your depreciation, that will give us the net property, plant, and equipment. Okay, so we can add this. We can add these accounts now. Now, if I made this positive, then I should set here the formula: the beginning plus acquisition minus disposal minus depreciation. Okay, but we can just make the depreciation as negative and then just sum up everything here. There. Okay, so it turns out that your net PPE ending is 770, and it's not the same as 1,000. This should be 1,000. Okay, so this should be 1,000. So let me just okay, this is the correct ending for net PPE. Okay, but we don't have yet the acquisition. Okay, we don't know what the acquisition is because the PPE at cost is not provided for us, but we can compute that. Now, there's a function in GoalSeek called in Excel called GoalSeek. We're going to use that. I'm going to teach that here. So here we're starting with 870, okay, plus your acquisition, less your disposal, and this is 0. Okay, less your depreciation, in order to arrive at 7. In order to arrive at the net PPE. Now it turns out that your net PPE at this time is wrong because we don't have the acquisition cost here. Okay, if we put here 130, okay, 130, then it indicates that it's still wrong because the net PPE should be 1,000. Okay, so how do we do this? Okay, go to data, and here you have what if analysis. What if analysis, and then we're going to use this very powerful function in Excel called GoalSeek. Okay, the GoalSeek, it says here, find the right input for the value that you want. Okay, so let's use this. Now there are 3 parts here. You have the set that cell to value by changing cells. So we need to input here 3 parameters. Notice that there are 2 icons here, the spreadsheet icon. This means that you should link this to your model. This one does not have a this one does not have a spreadsheet icon, and it indicates that you should type it, and you cannot link it to the model. Okay, so here, set cell. What are we setting? Okay, in this model, we know that the net PPE should be equal to 1,000. Now it's only 770, so this is wrong. Okay, we want this to be 1,000 because that's really your net PPE ending. It's 1,000. Okay, so set this cell to what value? We know that this cell should be 1,000, so we should type 1,000 there. Okay, to value 1,000 by changing what cell? By changing this acquisition. Okay, we have to link this. Okay, so what will Excel do? Excel will look for this value so that the net PPE at the end should become 1,000. Okay, so let me just Control Alt print screen. Okay, Okay, then we can now press OK. All right. So the actual investment was 230. Okay, and then let me Control V. I'll paste this so that you have a reference to your goal sheet. There. So that's how we were able to compute for how much was really the acquisition. So it was not 130, it was 230. Okay. So we can now adjust this. So this will be equal to, and I'll put a negative here, and then just link it to the acquisition here. There. It should be 230, which means that the company acquired a PPE worth 230 and not the one a while ago, which was 130. Okay. All right. So okay. So why is it still 120 when in fact it should be 70? Anything here that we made a mistake on? I'll give you a few seconds to discover. Okay, were you able to identify which did we miss out? Okay, so I deliberately did that because okay, it's important for us to check the items. So here it tells us that the net decrease in cash was 120, but it should only be 70. So always review the items that you place here in our template, and notice that when you look at the liabilities, for example, you have here accounts payable, you have accruals, and okay, take note of this. Did we miss out on the long-term bonds? Long-term bonds, there was an increase of 150.4. So what else is missing here? So what did we miss out? What we missed out was the notes payable here. Okay, we failed to include that here in our financing. So notes payable increased from 60 to 110. That means that it's a source of funds, right? Because from 60, it became 110, which means the company borrowed money. So this should be equal to 110 minus 60, there, 50. Okay, now check again, guys, your total operating, investing, and financing, and it turns out that it adds up perfectly the same as the decrease in cash. Okay, so with that, we're now ready to construct the statement of cash flows. Okay, by the way, so let's just identify this. This one is increase in short-term investments. This one is increase in receivables. This one is increase in inventories. So that we'll just copy this label here to our formal statement of cash flows. This one is increase in property, plant, and equipment. This one is also increase in payables, increase in accruals, increase in notes payable, increase in long-term bonds. Okay. Increase in long-term bonds. Okay, no changes in common stock. Okay, so I think everything increased here, right? Increase in short-term investments, increase in receivables, increase in inventories, increase in property, plant, and equipment, also in payables, in accruals, increase in notes payable, increase in long-term bonds. All right. So the distribution of dividends. Now we're ready to construct the formal statement of cash flows. So here we have the company Advanced Technologies statement of cash flows for the year ended 2020. Advantage of using this template is that we're just going to transfer everything here. Okay. So operating, investing, financing. So these are your main headings. Then the goal is that the operation should be here, financing should be here, investing should be here, financing should be here. Okay, 3 items. This should be 117.3, negative 230, and 142.7. They should be here in this line. Okay, so let's copy this first. Net income after tax, Control C, Control V. I'm going to copy this. Okay, then let's see, we're going to put that one. Okay, because we want the total to be here. Okay, so this is equal to, you can just copy from our pro forma. Oops. Here. And then add depreciation and amortization. Should be here. Okay, so this is our net cash flow. Sum this up. Okay, so let me just format the numbers there. Okay, net cash flow, and then you just copy this. So our increase in short-term investments is this one. Oh, sorry. Oh, no, wait. This will be part of financing. Let me put that here. Increase in receivables, that's equal to 59.8. Then go to this one. Okay, then I think we overshot this. Sorry for the format. I'll just bring this up. I'll just format this, guys. So, okay. There. Oh, we're sorry. We're still missing this one. This two. And then we have here this two. Let's just copy this here. There. Okay, so we just copied this. Okay, so these were the changes as far as the operating activities is concerned. Okay, and then we sum this up. It's equal to sum of these items here, and we have now 17.2. So that's the one, 17.3. Okay, and okay, we can put this here, and this is your net cash provided by operating. No, and not anymore, guys. Sorry, because here we already have cash flow provided by operating activities. So we just put that here. Okay, so this is the main title, cash flow provided. We already placed this because we know that if this is positive, so this is cash flow provided by operating activities. So this one. Okay, so next is cash flow used by investing activities, because we already know that this is a negative. So this is used by investing. So increase in net, so we just put it here, increase in PPE, and the amount is, this is 1, so this is equal to 230 there. So this is net cash flow used by investing activities, all right? And then for financing, we have the increase in short-term investments. So we link that here, okay? And then this one, increase in notes payable, Control C, Control V. And then this one also, Control C. So one good thing with the template is that you're just going to copy what we did in the template and transfer it to this formal cash flow statement. So this is equal to increase in notes payable, okay? Let's make it 1 decimal place to be consistent. And then this is long-term bonds, this one. And for the dividends, this one. All right. So when we add this up, sum so this is the 142.7 here, there, 142.7. Okay, so these are now your items in your template, operating activities, cash, that's cash provided, cash flow provided because it's positive. This one, cash flow used, because it's a use of cash. And this one, cash flow, financing is positive, so this should be cash flow provided. Changes provided. Okay, so that's cash flow provided by financing activities, which is 142.7. This is the cash flow used by investing, 230, and cash flow provided by operations, 17.3. So we add this. Sum of this. Okay, so there's where the 70 came from. So this is the net decrease in cash. Okay, net decrease in cash. Then we add cash balance beginning or cash on January 1, 2020, which is the beginning. My cash, the beginning is, okay, this one, 80. So we have cash balance, December 31, 2020. Okay, there. So we were able to construct the statement of cash flows. Okay, so let me just summarize again from the beginning. In the statement of cash flows, what do we need? We need the statement of cash flows first is, we said that it's a financial statement where we summarize the sources and the uses of cash from operating, investing, and then financing activities. Sources and uses of cash. And it's for a specific period of time. And what do we need in order to construct one? We need the balance sheet for the current year and also the previous year. And we need the income statement for the current year. So we're tracing the effect of the movements in the cash in your assets and liabilities and equity account and their impact on cash. So when assets increase, it's a use of cash. So for example, inventories increase, then we know that we use cash in order to increase your inventories. When property, plant, and equipment increases, then it's indicative that there's a use of cash. On the other hand, when liabilities and equity increase, that means it's a source of cash. More borrowings means more cash entering the company, okay? And the reverse is true for assets and liabilities and equity. So let me quickly summarize again, guys. Here, we're investigating the increase or decrease in cash. At the beginning of the year, cash had a balance of 80 million. At the end of the year, it became 10 million. So there was a net increase in cash of 70 million. So we'd like to investigate this. This is what should appear here, okay, in our net increase or decrease in cash. Okay, so the best way to do this is to prepare a pro forma where we identify the operating, investing, and financing activities, okay? And then we add everything here and check whether it tallies with the increase or decrease in cash, okay? So we start first with the net income after tax, and that will form part of your operating activity. Okay, so we just get this from the income statement of the current year. And then since this is not actually cash flow, we have to add back any cash expense that did not involve cash. In this case, it's depreciation and amortization. Okay, so we add this back, okay, and then we go down through the balance sheet. So short-term investment that should form part of your financing, and there was an increase of that. So we get the difference, okay, and it's a negative because short-term investment increase, which means we used cash for that, and it forms part of your financing. Okay, accounts receivable also increased. This is operating. So since it decreased, it increased, then it should be a source of cash. Same thing for your inventories from 415 to 615. That should be an increase in cash, a source of cash. I'm sorry, that should be a use of cash. Apologies, guys. And then net plant and equipment. This is something that we need to work on, especially if we're not given the at cost. If you're given the at cost data, then just use it. Just get the difference between the beginning and the ending, and then you're good to go. In this case, we were not given the information about the PPE at cost, so we had to solve for this one. Now, the difference between the net PPE, 870 and 1,000, which is 130, is not really how much was invested, okay? So we had to compute for this. How did we compute for this? We used this pro forma. So we had net PPE at the beginning. Then what causes, what will move? What are the movements that will affect the net PPE ending? Well, we have the acquisition cost, and then we have disposal in case there was some assets were sold, and then depreciation to get at the net PPE ending. We know the beginning, 870, okay? And we know the ending, which is 1,000. So what we can do is, we don't know the acquisition. So let me just repeat this, okay? So initially, we don't know the acquisition, so we leave this blank. Okay, disposal is 0. Depreciation, we know, it's 1,000. And then we're just making this a negative 1,000 because it's really a reduction in your PPE account. So the ending will just add everything because we already made depreciation as negative. So this is just the sum of everything. Now, as we said, notice that this is not the correct ending balance because we know the ending balance is 1,000. So we can use the goal seek here. What if analysis? Okay, what if analysis goal seek? And we said that the set cell. Okay, what we know is that this one. Okay, and then as I said, this is a spreadsheet icon. It should be linked to your model. N31 should be equal to 1,000. Okay, we're not linking this one to 1,000 here because there's no spreadsheet here. We cannot link it. And by changing cell, we're asking Excel to solve for the acquisition cost. And then, okay, that gives us with 230. Okay, which means that the company invested 230 in property, plant, and equipment. And we pick that up here, okay? And we're making it as a negative because this is a use of cash of 230. Okay, all right. Then we go to the liabilities and equity. Accounts payable increased. We know that that's a source of cash. Accruals also increased. We haven't paid this. Okay, expenses already incurred but not yet paid. So it's a use of cash, a source of cash. I mean, notes payable increased from 60 to 110. That's a source of cash. We increase our debt. Also for long-term bonds, it's also a source of cash. And then common stock, there was no change. But if there was a change, that should form part also of your financing. And then were there dividends issued? Yes, dividends of 57.5. So that should be a source of cash, and it should form part of your financing. Then we add everything, and then we got 70, which means that we got the correct activities that accounted for the net decrease in cash. So to formalize this, we just copy this. We just copy this under our main headings. Cash flow provided, okay, we know provided because there's a net cash provided by operations, net cash used by financing, and net cash provided by financing. Okay, I mean investing, net cash used by investing here. Okay, so you see the title cash flow provided, cash flow used, cash flow provided. Okay, so I'm sorry, I have to remove the parenthesis there because parenthesis means it's used, negative. Okay, so we just copied this. Net income after tax depreciation, that's net cash flow. And then we accounted for the increase in receivables, inventories, payables, and accruals. Okay, add everything, giving us the net cash provided by operating, and then net cash used by investing, and then net cash, okay, net cash provided by financing. So these three main parts of your cash flow statement are indicated here. So we sum this up, we get the net decrease in cash. So let me just capitalize this. Net decrease in cash, okay, of 70. Okay, and then cash balance at 80. Then we add everything to get the cash balance at the end, 10. Okay, so that's correct. 10, 80, 70 here. Okay, so that ends, guys, our discussion on the statement of cash flows. Okay, so I hope you learned about how the pro forma in computing for the statement of cash flows.